Do you ever wonder how the wealthy became rich? It wasn't by chance or luck. They didn't stumble upon their fortune or win the lottery. No, the path to wealth is a deliberate and intentional journey. Year after year, month after month, they made a conscious decision to invest their money wisely.
I'm rich! I'm wealthy!
You know, people that retire wealthy, it wasn't an accident. They didn't get to wealth, they get to retirement and go, how'd that happen? Where'd that come from? They're not surprised. They know exactly where that money came from.
In this video, inspired by Dave Ramsey's teachings, we will explore the best way to invest your money, unveiling the secrets of long-term wealth creation. So, if you're ready to take control of your financial future and follow in the footsteps of the wealthy, let's dive in. So, what is the best way to invest your money? According to Dave Ramsey,
my mutual fund groupings have beat the market. You just pick mutual funds that have outperformed the S&P. It's really not rocket science. Not all of them have outperformed the S&P. A lot of them haven't. Over half haven't. But don't pick one that didn't.
To better understand this, we first need to know what mutual funds and S&Ps are. Mutual funds are investment vehicles that pool money from multiple investors to invest in a diversified portfolio of stocks, bonds, or other securities. They are managed by professional fund managers who make investment decisions on behalf of the investors. The S&P, or Standard & Poor's, refers to the S&P 500 index, which is a widely recognized benchmark index that tracks the performance of 500 large-cap U.S. companies. Now let's analyze why Dave Ramsey emphasizes the importance of picking mutual funds that have outperformed the S&P. He advises against choosing mutual funds that have underperformed the market. Just like betting on horses, if a horse has never won a race, it would be unwise to bet on it. Similarly, if a mutual fund has consistently failed to beat the market, it's best to avoid investing in it. Dave Ramsey's approach is based on the principle of investing in funds that have a proven track record of outperforming the market. By selecting mutual funds that have demonstrated better performance than the S&P, investors increase their chances of earning higher returns on their investments. This strategy aligns with Ramsey's conservative approach to investing, where he emphasizes the importance of minimizing risk and focusing on long-term wealth accumulation. While not all mutual funds will outperform the S&P, Dave Ramsey encourages investors to conduct thorough research and select funds that have a history of success. By choosing funds that have consistently beaten the market, investors can increase their odds of achieving their financial goals. Rather than chasing speculative investments or taking unnecessary risks, he advocates for a disciplined and informed investment strategy that focuses on proven performers. So what can you do as a beginner investor?
What do I do? What do I do?
So, if you're ready to do this and you want to sit down with someone to help look at your financial picture and help you do your investing, you're at baby step 4.
Dave Ramsey emphasizes the importance of having knowledge when it comes to investing. He believes that individuals should seek guidance from professionals who have expertise in the field and can teach them about concepts like mutual funds. In fact, he developed the SmartVestor Pro idea specifically to assist those who may not have much money or knowledge about investing and may feel intimidated by the process. Also, he mentioned that being rich has nothing to do with accident or just a stroke of pure luck. It is something that you plan for, risk for, work hard and smart for. Being hungry for knowledge on how to accumulate wealth is crucial in increasing the probability of financial success. It takes intentional discipline and fortitude, not easily giving up on hurdles and challenges along the way. The underlying message is clear. If you want to achieve financial success and become a millionaire, it is essential to seek guidance from someone who can help you understand your financial situation and assist you in making informed investment decisions. This guidance can provide individuals with the knowledge and confidence needed to navigate the complexities of investing.
That's exactly the answer I want!
Several articles echo this sentiment and offer further evidence to support Dave Ramsey's statements. According to Hawkbank, Many individuals make the mistake of investing in assets they don't understand or relying on recommendations from friends or social media influencers. This lack of knowledge can lead to unforeseen risks and potential losses. To invest properly and make informed decisions, consider the following tips. Understand the features of the asset. Take the time to learn about the key characteristics of the investment you're considering. Assess whether these features provide an advantage and align with your investment strategy. For example, understanding the differences between senior secured bonds and junior unsecured bonds can help you evaluate their respective risks and potential returns. Identify the sources of risk and return. Gain a deep understanding of the factors that can impact the performance of your investment. Stay updated on the economic environment, market trends, and alternative investment options by studying annual shareholder reports, following financial news sources, and analyzing market data. This knowledge allows you to estimate the opportunity cost of your investment and make informed forecasts about its future performance. Align the investment with your goals. Every investor has different financial objectives and risk appetites. Clarify your investment goals, whether they are short-term or long-term, and evaluate your risk tolerance. Choose assets that fit your financial goals and risk preferences. For instance, if you have a conservative approach to investing, you may prefer assets with lower volatility and reduced risk exposure. As Dave Ramsey famously says, you've got to learn.
You see, you've got to learn, people. You've got to learn what's really going on out there in the real estate world and in the investing world if you want to have any money.
Remember, being an informed investor involves continuously educating yourself, conducting thorough research, and seeking professional advice when needed. By asking the right questions, understanding the features of assets, assessing the sources of risk and return, and aligning investments with your goals, you can make more informed and successful investment decisions. Thank you for joining us in this insightful discussion on the best way to invest your money. We've explored the importance of knowledge and understanding in making informed investment decisions. Remember, investing is not about blind speculation or following the crowd. It's about equipping yourself with the right information and strategies. So whether you're a beginner or a seasoned investor, prioritize gaining knowledge and making informed decisions. Seek out trusted resources, consult professionals if needed, and stay updated on market trends. Remember, investing is a journey, and by investing in your knowledge, you're investing in your financial future. If you found this video helpful, don't forget to like, share, and subscribe to our channel for more insightful content. As always, we appreciate your support. Happy investing!